let's just start by launching a VWAP from this initial day on the chart. We're going to do that using one of the two studies that we haven't yet gone over. We're going to start with date VWAP. Now, date VWAP is, again, a little daunting. For actually, all three of these studies are a little daunting when you first see them. What's daunting about this is that this is a one-size-fits-all VWAP. It can do a number of different functions for displaying a VWAP over multiple days. So you have to kind of know which settings you want to apply in order to achieve the VWAP that you're looking for. Up here at the very top, there are, again, two critical inputs, date method and VWAP type. So for right now, we're just going to stick with date method. We're going to talk about the two options here. There's the raw date input, and then there's a number of days ago. So between these two settings, you're going to have the two sort of different ways of calling a VWAP into action. There's date specific and days ago, or date relative, as I think about it. The date specific is something we'll get to in just a minute, but you may be familiar with it from the concept of like an anchored VWAP, or something that's locked in place to a certain launch date. Days ago, as the name implies, is more of a recent relative date assessment. So instead of saying, I want you to launch a VWAP from, I'm just picking a random date, the 1st of January, the first trading day of January of this year, which would require the raw date input. If we were looking for a VWAP from yesterday, it would be much faster to use the days ago setting and set it to 1 day ago. So what you're hearing here is that there's two different methods of describing the date from which we want to launch a VWAP. The first of which requires we actually know the date, and that date is not going to change. The second option here, days ago, is a little more short-term, quick and dirty for just quickly calling a VWAP from over the last several days. Right now, I'm going to set this to days ago, and we're going to use the days ago input to change this to 5 days ago. And that's going to launch a VWAP from this starting day on my 5-day chart. Oh, and I'm sorry, I actually have to turn the study on too. So we go back in here and make sure we check show study. You shouldn't have to do this by default, but because I called the studies up in advance and then hid them, I'm needing to remember to turn them back on. That's all that's happening. And when we click apply, a whole spider web of charts appears. So let's do something else. While we're in the edit studies window, I'm going to go hide the intraday VWAP, and I'm going to use another custom little study called equities day divider. The reason I'm using equities day divider is I still want these vertical lines to show us where the days are, but I don't necessarily want the intraday VWAP. Now we'll pull up the intraday VWAP again in a second, but I'm sure you guys can already tell from your familiarity with an intraday VWAP chart, if those day dividers weren't there, and we kind of ignored some of the gappier moments, small gaps, or where the market closes and reopens, this could be an intraday chart. Look at all the behavior that's similar or comparable to what we've learned from our intraday VWAP trading. Support and resistance of the deviation bands, slope or flattening of the VWAP, etc. So just off the bat, I observe that we gap down below our multi-day VWAP and cannot trade above it, our first rejection, which begets some pretty big selling. On a rally up, we fail right at the deviation band. Not a very massive type 2 trade that continues lower and lower. It really doesn't. It kind of stabilizes around this prior low and actually makes a higher low. But look at how similarly we get a clue that we're crossing from the outer fast lane back into the slow lane. What type of market behavior do we expect from that point onwards? We expect to be unwilling to break back into the fast lane. This is kind of a check mark pattern, if you will, right? We rally up to the VWAP, we come back down, and then magnetically attracted back up towards the VWAP. Same thing here. Wow, look at that pristine respect of the -1 deviation band. Nice support at the +1 deviation band here, kind of ignoring that little pop off of the VWAP. But here today, we pulled right back to the 5-day VWAP before kind of making a significant low and coming off of that and stabilizing. Now notice what I did was I just launched a VWAP from 5 days ago. In this instance, because that's the most recent trading week, and I wanted to ignore the half day on Thursday, I wanted a recent or short-term encompassing of the trading activity that we've experienced. So that's why I picked this 5th day ago. And I also thought it would be a good description of the days ago method of how we count backwards from the current day, 1, 2, 3, 4, and 5 days ago. And you can see that's way faster and way easier than me going in and getting the exact date and then trying to type it in and not typing it in properly and forgetting to hit enter. It's a much faster way for short-term swing traders of calling a new or multi-day VWAP, I should say, into action. So we're no longer just thinking about an intraday VWAP. We're expanding, kind of like if we learned how to do math on really small numbers, like 2 + 2 = 4. Well, then couldn't we do 200 + 200? Couldn't we do 2000 + 2000? I know this is a very simplistic analogy, but we're basically taking everything we learned on VWAP on short term, and we're just growing it to a macro scale. Let's say we wanted to launch a VWAP from one of these 2 opportunity days, either a major high or a major low. And we didn't want to count a number of days retroactively. So let's go back to date VWAP. What we could do is we could set this from not days ago, but raw date input. And then we're actually going to have to go, what was that, the 27th, I think? So the 26th, try this. Whoops, and there we go. The text input fields are super finicky in Thinkorswim. So now all I've done is I've changed it from days ago to the raw date input. Oh, looks like I got the date wrong. So actually we'll try the 27th. There we go. Beautiful. So now what we're doing is we're launching a VWAP from a date-specific anchor point. Another big difference between these two is that, as I said before, these are anchored in place because we're giving them a fixed date from which to launch. It's very different than the days ago approach, which will constantly update as time goes on. An easy way to think about that is, hey, what was 3 days ago right now? It was the 6th of December. Okay, well, in a week, what is going to be 3 days ago? Right? It's not the same date that we were just launching a VWAP from. Time progresses, and 3 days ago from a week in the future is going to be a totally different date, obviously. Now that can be very useful if you constantly want, let's say, yesterday's VWAP to be visible on your chart. The setting for that would be days ago = 1, because that would constantly, always, forever be yesterday's VWAP. But if there's a way that you, not a way, excuse me, if there's an example of an opportunity where you really want to launch a VWAP from maybe the Tesla Cybertruck announcement or a particularly weird Trump tweet, then you would need something that is date anchored. It is absolute as to that date and time. The higher the volume, the higher the impact on the stock's future, the more likely a VWAP from that event is going to matter. That's kind of, forgive me for saying this again, that's kind of intuitive, right? If somebody had a major life-changing event happen to them, wouldn't that be a formative event from which they kind of either redefine themselves or it cements who they truly are? someone suffers a traumatic or a very positive event, that can really stand out in their mind, right? I'm rolling my eyes because we're all human beings. We've all experienced positive and negative things. And we think about our lives from events going forward. Another question, have I noticed algos preferring certain prior day VWAPs over others? For example, yesterday versus the 5-day VWAP. You know, I do notice a propensity to abide by yesterday's VWAP and the 5-day VWAP, but there are no other X number of days ago VWAPs that really catch my eye quite as much. And that kind of makes sense if you're dealing with a trade as an institutional trader. If you get assigned or you receive an order for 300,000 shares of stock and you don't finish that order in one day, the VWAP from that day will be continued forward to include the second day over which you're trading. You're going to be benchmarked or judged against the VWAP across both days. So in a sense, watching yesterday's VWAP can make a lot of sense for institutional traders. Something like the 5-day VWAP, I would argue maybe because that's the trading week of 5 days. But no, I don't, like, I think what you're kind of getting at is maybe is there like a magic number, like the 3-day VWAP, the 5-day VWAP, the 7-day VWAP, the 9-day VWAP, something like that, kind of similar to a moving average? No, it really is idiosyncratic to each stock, which makes it both incredibly frustrating and pretty nicely tailored to that stock's sort of history or experience, right? So let's go in here and take a look. You'll notice that there is also a start time ability. So if you really want to get absolutely precise and launch from a very particular candle, you have complete control over that too, which is really exciting. Notice that the date method is going to override whatever you put into the time code down here. So what that means is we've still got 5 days ago written in the days ago input. But because we've changed the date method and set it to raw date input, it overrides and doesn't read what's in the days ago setting. So just to be clear, here an example of that, I'm gonna write 154, and nothing changed. Yep, still the same VWAP. And while we're on this subject, let's do this. I'm gonna go in further here. We're gonna talk about the different VWAP types. Now this sounds like I'm about to show you 80 different types of VWAPs or variants. There's really not. There's date time, which is the default, and that's what we've been playing with here. A start date, a start time, a number of days ago, an actual numeric input of some sort. That gives the user a lot more control over where a VWAP is launched from, obviously, but it requires a lot more attention and kind of manual guidance. When we look at this menu, the other 4 options, high-low, high VWAP, low VWAP, and HHLL, those are all 4 related variants of VWAP. And they are, just to be clear, they are just VWAPs. I'm calling them a variant of VWAP because they're going to be launched from particular points within a given day. So I created this because I thought it'd be a pain in the ass if you had to go literally measure which candle, which day, and type all that in if you were simply trying to launch a VWAP from a high or low of a given day. That's where these other options come in. And just to be crystal clear, I'm going to kind of explain each of them, and then we'll go through and see some examples. The high-low option will display both the high and the low VWAP of a given day. So it's going to create both a VWAP from the highest high and the lowest low within that individual day. High VWAP specifically only plots the high VWAP of the selected day. And same with low VWAP. So if you're only trying to display or see one additional VWAP, you would choose either high VWAP or low VWAP individually. And then finally, there's HHLL, which stands for highest high, lowest low on the entire visible chart. I built this option because it'll automatically let you, or I should say, it will automatically plot for you VWAPs from the most extreme high and the most extreme low without any date input whatsoever. So just to be crystal clear again, date time requires some user input. High and low VWAP on the same date requires some user input. High VWAP and low VWAP both require some user input. But HHLL, that's the like hands-off, whatever, just show me the damn big VWAPs option. So let's do this. Let's launch a VWAP. Actually, here, I got a good idea. I'm going to hide this study for just a second. We're going to go back to seeing our intraday VWAP. And we're going to see it on a little bit of a finer granularity. So we're looking at a 1-minute chart. I'm going to zoom in on this a little bit. So here, we're back to normal VWAP land, right? We're going to go into our date VWAP study, and we're going to change it from a raw date input to a days ago setting. That's faster for being able to look at the current day rather than typing in 2019, 1209. I'm just going to set it to 0 days ago. 0 days ago is today, obviously, right? Then we're going to change VWAP type from being date time, which would start a VWAP at the start of today. If we just left it set the way it is right now, let's actually do that just so you guys can see it. I'm going to click apply. And there we go. We can actually see now it's a green-red VWAP plotting over top of the normal intraday yellow and pink VWAP. So that's if we didn't change any of the, if we didn't change any of the settings under VWAP type. But now let's go in and choose low VWAP. So notice I haven't changed any of the start date or the start time, and I've only told it look on the current day. So we would expect to see a new VWAP launched from this exact low. I'm going to click OK and apply, and voila. So notice we didn't have to do any identification of where that candle is. We just said, find for me the low of the day and launch a VWAP for me from that point. Now, it is also kind of fascinating that the same thing we talked about with seeing a really big VWAP across many days, and we still see the same kind of boundaries with deviation bands. We see the same kind of respect afforded to the VWAP, same principles like slope matter. Well, that works with a micro VWAP as well, a VWAP inside of one day that doesn't span the entirety of the trading hours. For VWAP type, let's change this to high VWAP. And again, we should expect to see a VWAP launched from the highest high of the day. I'm going to click OK. And kind of hard to see against a red background, so let's do this. We'll turn off our intraday VWAP again. And what a beautiful thing to see. The same principles still apply. And again, it's very close to the intraday VWAP because the intraday VWAP was started here. This high VWAP was launched here, only 5 or 10 candles later. Notice that, again, same sort of respect, same sort of resistance that we would anticipate. And again, the similarities between intraday and this VWAP, just in this one instance, because they both started from near the same area. Now, what if we applied, let's go into this study, and let's apply both high and low on the same chart. And then let's do one more step. One of the options within here is to show dev bands. Let's change that from bands to none. And this is where it gets, I think, really interesting. What we're starting to see is that there is a macro resistance VWAP and a kind of macro support, I shouldn't say macro, an overarching or overriding resistance and support VWAPs that we can create from the highest high and the lowest low of the chart. You can actually see how the market got squeezed in kind of a funnel between these two for a period of time. It then tried to break down and tried to reject off that VWAP and go lower, but it couldn't. Instead, it popped back up and really just oscillated. It went flat and sideways for the remainder of the day. Whenever I describe VWAP to people, or VWAPs, I should say, or deviation bands, I always point out that this is the actual support and resistance the market experiences that's too hard for us to be drawing on the actual chart. It's too hard to adjust and make dynamic each of these support and resistance lines that we got to track automatically. Why couldn't we just let the calculation determine for us where support and resistance exists? And I guess I probably should show you this last option here. Instead of going for the high-low setting, which shows us the high and low on a given day, or the high VWAP or low VWAP individually, which we just looked at, I'm going to change it to highest high, lowest low. And when we zoom out, notice I didn't change anything with the time code. I didn't change any of the date definition. I literally just changed the type of VWAP that we were looking for. And what occurred is this highest high still is our launch point for that red macro kind of resistance VWAP. But now we're actually grabbing the lowest low available on the entire chart for our effective support. You can see here that on that individual day, it really still was wobbly and kind of oscillating at that volume weighted average price. But then, barring this little burst below, found support, bunch of support, another burst below. But it can't really live below the VWAP for very long. Even when we came back today to what was also the 5-day VWAP, we found some nice support and made our low for the day. So you see what we're doing here is we're trying to detect otherwise hidden support and resistance using these major and nearly automatic launch points for where we would start volume weighted average price. This also, I should mention, applies to really, really, really big charts too. So if we go to a 90-day, 30-minute chart, notice I didn't change a thing other than the time frame. I didn't change any of the settings within the study. It automatically knows to go grab the highest high and the lowest low and launch VWAPs from those areas. Just out of curiosity, I am going to turn on the deviation bands again. I'm kind of burning. Interesting. Okay, so it's a little hard to see, because of the colorization, but I'll draw this in a little better. There's a deviation line from this red VWAP that it looks like as we got down into the fast lane, reverted, and then tried to make a new low, there was some significant support down here. And in fact, as it rallied up, it came right up to the deviation band. I'm kind of drawing that to make it a little easier to see. And then spent time oscillating around the deviation band and is now finally above the deviation band. So you remember how we talked about earlier in the session, I talked about how there were stages of the market, stages of the market such as being in the fast lane to the downside, oscillating or crossing at this deviation band. I'm drawing in here. And then finally remaining on one side or the other. The only thing we didn't obviously draw in because it didn't occur was oscillation at or near the VWAP from before. But you can see here that even on a 90-day chart of McDonald's, not a chart I typically am looking at on a 90-day time frame, there are deviation band principles and VWAP principles that can apply here and help us to make more sense even for short-term or medium-term swing trades. Part of this is still discretionary or manual. There's still some element of the users, tasked with finding that important launch date. But I always tell people it's like there are only a couple usual suspects. Okay, we're not dealing with literally testing every VWAP from every candle or every day. There are usually only a couple massive critical technical or fundamental days. that we should or could launch from. And I do get questions about this a lot, so I'll address it really briefly here. Show adaptive VWAP. An adaptive VWAP is a function I built in that will create a VWAP spanning the entire chart, no matter how big it is. So let's do this. I'm going to set this to days ago, 0, and I'm turning on the adaptive VWAP. Let's remove our intraday VWAP just to keep the charts clean. And you can actually see here, so here's the 0 days ago VWAP that we were just referring to. And then here is our adaptive VWAP that spans the entirety of the chart. So let's say we went and changed the time frame of the chart to a 20-day chart. And on the fly, it calculates a VWAP spanning that entire 20 days for us. Same thing at 90 days. And notice it's pretty quick to calculate. So you can rotate through time frames just like that. If you're trying to estimate sort of, show me where the 90-day VWAP is, show me where the 20-day VWAP is, just to get a gauge of where average price is spanning those different time frames. If we are at the VWAP over the last year or something like that, unless something critical happened exactly 1 year ago, no, then that's just an arbitrary VWAP. I think that's the hard part about having some control or command over where we launch the VWAPs from. Think about if I told you, hey, we're at the VWAP spanning the last year of trading, that sounds significant, that sounds appealing, because our human brains make sense of exactly 1 year, right? We think about that as being meaningful. But does anyone else, does any fundamental assessment of a stock really matter exactly what happened exactly 1 year ago? Not unless there was a critical event. It's nifty to kind of, it's quick and easy to make sense of, well, how has this market traded over the last year? Oh, well, I'll look at a 1 year chart and I'll apply a VWAP and I'll see where the average price is. I think that's perfectly fair in using a long-term VWAP like that. But I would never say, oh, we are at the 1 year ago VWAP. And I'd look down at the calendar and go, December 9th of 2018? Did anything important happen back then? Because if not, I'm literally just arbitrarily making up that a 1 year VWAP is more meaningful than a 1.5 year VWAP or a 10-month VWAP. I would much rather have a VWAP that has a strong thematic definition to it than a round or clean calendar duration, if that makes sense, right? Like I'd rather have the 17-day ago VWAP launched from a critical low than the 20-day VWAP.